Hello and welcome. My name is Stephen Young. Glad to be here with you today. Today we're going to take you on a journey that I've walked over the last 6 years. I've traded every asset class that there is known to man, from CFDs, too much work, options, too much work, futures, a little bit more money but still work. And what I wanted to find was that I wanted to do less work and make more money. Who's like that? Good. So I'm the right guy that you want to listen to today, because that's what I'm committed to, and what more importantly, I'm committed to for you as well. This is a little bit of a background for us. I'm an authorized representative, and I'm not taking into account your personal investment advice. The trades you're going to see that I've taken have already been taken, so please don't use this as advice. I'll talk to you a little bit later as we go along the way. Again, this is a little background in myself, and so this is a little background on myself. I've spent 30 years in the financial markets. I started out with Payne, Weber, Jackson, and Curtis, and have traded shares most of my life and been the executive branch in companies as we've moved along. This is Greg and myself on the London trading floor. 6 years ago, I started trading foreign exchange. I put $25,000 in a trading account. I traded it for about 3 to 4 weeks. What do you think happened? Lost the lot. It was gone. So having the background that I have, I put 10 more thousand in a trading account, and I started trading that. I bought some tips and robots and some advice, traded that for 2 to 3 weeks. What do you think happened to that? Lost it. $35,000 down. So my Australian partner, Kim, says, Stephen, I know this is your money, but she said, you've just lost $35,000 in about 8 weeks. She said, I don't know that I can live with that. You need to get this sorted out. So I called an Aussie friend of mine in America named Mark Scott, and I said, Mark, can you get me with someone that can teach me how to do this? I said, you know I'm dyslexic. I get things backwards, and I have to slow it down. I need to see like monkey see, monkey do. So he said, well, I know this guy in London named Greg Secker, and he said, if you'll fly to London, I'll set up an appointment with you. So 6 years ago, at 55 years of age, I had the thought that I could outlive my money, and it greatly bothered me. So I flew to London to meet with Greg, and when I get to Heathrow at 6 o'clock in the morning, I get met by the company. They take me down to Chelsea Harbor, and he pawns me off on a 24-year-old little girl. I'm not real happy because I've lost $35,000. I've flown across the world for 26 hours. I don't feel too good about myself. I'm feeling a bit depressed, if you will. And she pats me on the back. She said, Mr. Young, come with me. It'll be fine. She walks in and she proceeds to make 8,000 British pounds in 5 minutes. And my eyes popped out of my head because I'd never seen anyone do it. I knew that it could be done. And she did it just like that. So the thing was, I traded with Greg for the next half day, and then the next 2 days. I came back to Australia, and I traded for the next 3 years. Greg called me up, and he said, Stephen, I've been looking at your journals, your trading accounts. You've done this exactly the way I want it done. He said, will you teach other people to do this? I said, no. He said, why not? I said, well, I'm making money hand over fist, which I've always wanted to do, and I'm enjoying myself. I'm surfing. I said, I'm playing golf. I'm doing the things I want to know. He said, I just saw a surf video of you on the internet. He said, that was you. And I said, yeah, it was. He said, how much do you weigh? I said, what kind of question is that? He said, well, how much do you weigh? I said, 87 kilos. He said, you're fat as a frickin' bullfrog. He said, get off your butt and go help somebody else. I was there for you. So that's how I got here. We built a trading floor in Sydney. I'm leaving for Johannesburg, South Africa tomorrow to build a trading floor there as well, and in Cape Town. Our next one that I will build is in Miami and in Los Angeles, and then Toronto, Canada. All of these are there for 21st century for you to have availability for. So to get this started off right, this program is not for everyone. It's a $12,600 program. It's seriously for serious, committed, and decisive people who want to learn to trade, because we don't have time to muck around. We want to teach you to trade, and we want you to get on it. Who's interested in making a lot of money in a quick period of time? Great. I'm going to show you how to do that. So to get it started off right, how many of you would like to see about 35,000 Aussie dollars made in about 4 minutes? Good. This is a trade we took not so long ago. It was 35,000 Aussie dollars, 19,000 British pounds, and it's called a British pound pivot breakout. So I'll give you the parameters of the trade, where we're going and what our target is.
Okay, so we're looking at a pivot breakout now on British pound against the US dollar. Notice how the British pound against the US dollar has ranged throughout this, what we call R.5 to R1. And as British pound now breaks through here, as it's now doing,
this is our target. This is what we're looking for.
Buy British pound, and we're going to look to run up here. and that means running towards the R2. We're just really going to look to take 20 points. We're going to have a 20-point stop, and we're going to have a 20-point target. So a simple 20-pointer. Let's go place that trade. Okay, so it looks like we have cable at about 61.68. We're going to go 1,000 a point. We have a 20-point stop. So that's 20,000. And yeah, we'll happily buy that. Good. And we can see here, that's good. So 1,000 a point. Our average price, our current price here is 161.89 because we're up 1,000, and the trade is moving. Now we're happy to take that 20-point stop. That's about 20,000 risk on a 2 million account. That's 1%. So we're happy with that. We are in the trade. We'll now wait for the position to see if we have some movement, and if we have movement, you'll see it move quite rapidly. So we have a couple of points. We have 3,000, 4,000, 5,000. Expected to pull a little bit back off that level, bounce, and then continue moving. Notice here as I extend out the line here, we've got the trade registered here. Current price 61.70. P&L is 2,000, now 3,000. So this is going to move around. It's the deal price on the trade, as we can certainly see here, was 61.68, and the trade is steadily moving along. And all we're looking really now to do is pull 20 points. Now the way we'll do this trade is on this platform I'll hit close deal in a second, which will then bring up the trade ticket. It's a lumpy trade, 1,000 British pounds a point. So that means that we need to make sure that the brokers are aware that I'm trying to exit the trade. So I'll hit close deal, and it will allow me to bring up the deal ticket. And then I'll literally just hit close, or I'll hit obviously buy to close. Sell to close my long position. So we can see this is that pullback I was talking about. It's coming back a little bit now, just testing that level. What I was expected to do would be bounce, and immediately now start to move back upwards, and that would be my expectation. So again, I'm up a point, 1,000. So not a lot right now, but I expect this bounce, and it's now starting to bounce upwards. So back to 3,000, 4,000. And really now just waiting to close the deal. When we get over the 20-point mark, where I should be able to see about £20,000 of profit, I'm literally going to start to hit the close deal button and pull this trade off the table. I'd expect the run around now, given that it's broken now, clearly gone through that level. Here we can see it's 12,013. Here we are. We're up to the 21,000 mark. So I now want to exit this trade. So I'll be now moving my mouse. See if it can hold this level. Let's close the deal here now. And see if we can lock that 20 points. So it's holding 22,000. It's not going to move anymore. Let's click the close deal, and let's get this trade priced up. I'm waiting for the broker now to pull my price. So you can see the price has moved around, and here I go, and it's going to hit sell at 20 points is what I'm after, which is around this level here, and we'll take the trade just about here. Let's tick it up to 20. See if we can capture 20. There it is. Okay. Oh, we got 19. Okay, that's close enough. So there we are. That's how you make £19,000 in about 3 or 4 minutes.
That's how you make about $35,000 in about 4 minutes. So how many of you'd like to do that? I'm talking to you. Now here's the thing. You're obviously not going to start out with $1 million account, right? But if you knew that you could make $200 a day, $1,000 a week for your first 6 to 8 weeks, minimum, how many of you would be willing to put $2,000 to $10,000 in your trading account? That's what I'm talking about. That's where we all started. Please write this down. The key to trading foreign exchange is consistency. It's necessary and essential that you have consistency in your trading, or you will not succeed in this market. It doesn't matter whether you start with 2,000 or 10,000. When I came back from London, I put another 10,000 in my account. So you're not going to be anywhere near where I was, because I was $50,000 down by the time I'd flown to London and came back and put another 10,000, and then I was 60,000 at that point to start with along that period of time. So the thing is, you're going to walk in the path that I've walked, that Greg has walked, and Jamie wants you to walk along the way to have more money in your life. The second key to trading is belief. So I want to share with you how belief works from a negative aspect. What do you think my belief was after losing $35,000? Do you think it was low or high? No, it was low. I didn't feel too good about myself. Do you think I wanted to put any more trades on? Absolutely not. We get paralyzed in doing this. Do you think I wanted to put any more money in it? No, and my partner damn sure didn't want me to put any more money in it. So the key is, along that way, is that you get yourself sorted out in a hurry and get yourself where you're going. So let's back it up and look at the direction it needs to go. What do you think my belief was when I saw a 24-year-old little girl make 8,000 British pounds out of the market in 5 minutes? You think it was low or high? It was high at this time. See, I got kids older than her. And so when I saw her take the 8,000 British pounds out of the market in 5 minutes, my mind just jumped. I was ready to go. Do you think I wanted to take more trades? Couldn't wait because I'd seen someone do it. Do you think I wanted to put some more money in it? You bet. So I've been living in this for the last 6 years in this belief cycle. And this is the key to getting you where you want to go. We will instill this with you because we're sharing our trades. We call it earn as you learn. Now, I'll ask you a little bit later about the trades that we're taking and whether you want to be there or not as you see as we go along. So why trade Forex? How many of you in this room know nothing about foreign exchange? Good. I'll bring you all up to speed. I'll cover why we trade, where we trade, and how we trade. How many of you trade shares? Great. How many of you trade foreign exchange? How many of you making a lot of money at it? Okay, that's why you're here. Good. What? Not yet. Good. Well, that's why we're here, isn't it? Good. Excellent. Excellent. Well, we'll show you how to build your account. So that's another great thing about being with a professional trader is we simply sit you down live one-on-one with a professional trader and we show you how to make an immediate income out of the market. So why do we trade foreign exchange? These are the three primary reasons. One, you can create unlimited income trading foreign exchange. Number two is that it's the fastest way to make serious money in any market. And number one is that it's the number one asset class choice of millionaire and billionaire traders. We use this to extract a profit out of a very easy, simple to use market, as long as you have the proper rules, tools, and strategies for entering and exiting that market, just like that in the market. So this is a wonderful market. There's no other market like it in the world. It's a $4 trillion a day market. Listen carefully. It will be a $10 trillion a day market by the year 2015. That's how much money is flowing into this market, to give you an idea. The leverage is unmatched. You can control 100,000 with only 1,000. People ask me, well, why would I want to do this? It's the same reason you buy a home. You might be able to pay full value for a property. I told you I was dyslexic, so. You might be able to pay full value for a property, but we don't. We put down 10 or 20 or 30% according to the payment we want, and we leverage the rest. Why? Because we know housing will double in 10 years. It's no different in this. They let you do this because they know you can double your money in a short period of time. Now, the key is managing the risk. Yes or no? Absolutely. We have to manage our risk in the market. To give you a size of this market, if this glass of water represented the New York Stock Exchange, then this is the foreign exchange. Yes, there are massive opportunities in this market. Yes, 95% of all your debt can be resolved in a 6 to 12 month period of time. I was looking at a brand new trader with your company today who has $95,000 in their trading account in less than a year, started out with $10,000. Good trading? That's what you're looking for along this way, so we will show you how to do this. 95% of all your problems can be resolved by cutting a check. Now, I know we use FPOS here in Australia, but we still use checks in the United States. So 95% of all your debts can be resolved by your ability to cut a check, because the world is weighted down right now with problems. See, there's a major problem why you need another stream of income. The euro is going to take about 786 billion euros to bail out the pigs this year. That's Portugal, Ireland, Italy, Greece, and Spain. No one's talking about Italy. No one's mentioned Belgium. We've heard about Greece and Ireland. They spent 86 billion last month on Greece and Ireland alone. Now, when the euro goes down and crashes about May of this year like it did last year, what happens to the U.S. dollar? Goes up, doesn't it? Now, when the U.S. dollar goes up, what happens to the Aussie dollar? So that's why you want to have an extra stream of income right now. And the great thing is you can set trading accounts up all over the world. I have a trading account here in Sydney, I have one in London, and I have one in the United States, and soon South Africa, and then Singapore. And we go along and open these separate accounts so that we can get ourselves and leverage our money effectively in the market. The key is having that stream of income. Now, there's various ways that you can go do that. This is the quickest and the easiest, as long as you go along with someone that's already been there for you. It's open 24 hours a day, so make money whenever you choose. The best setups in the world, one of the reasons I live on the northern beaches of Sydney, are at 7 o'clock in the morning and at 7:30 to 10:30 at night. Good idea? Yeah, because you're all working right now. You need to go and do your work and the things that you're doing, and the setups are before you go to work for long-term strategies, and then intraday strategies are great when the British market opens, and then the US dollar comes in on top of that as well. Now, to give you an idea, if the currency pair goes up, we simply buy the Aussie dollar and we sell the US dollar. Or we say we're going long on the Australian dollar and we're going short on the US dollar. Conversely, when the currency pair goes down, we simply sell the Australian dollar and we buy the US dollar. We make money up or down. It doesn't matter. It's the key market that we use, and I'll show you different sets of trades that will show you how we use those directions for ourselves. You have to master fear and greed. If you don't, it will take your money just like that in the market. So you have to have proper rules, tools, and strategies. Now, otherwise, you get caught up with herd psychology. Your friends all come to you and say, hey, you got to get in the market. Got to get in the market. Market's moving. Please write this down. If the market's moving, it's already moved. Move on. If the market's moving, it's already moved. Move on. It's too late. You've got to have what's called an early signal. That early signal is called an elegant entry. Please write that down. It's a key to trading, as you will see as we go along. You're looking for what's called an elegant entry. An elegant entry means you have a high probability of success of the trade going your way. An elegant entry means you have a high probability of success of the trade going your way. So we're looking for an elegant entry. We're also looking for 3 bars of the same color going in the same direction. We're looking for 3 bars of the same color going in the same direction, whether it's down or whether it's up, whether they're red or whether they're green. Now, this changes as well, but as a beginning trader, this is where you're going to start. I've cut a vignette out of the BBC, which will give you a little bit better idea of herd psychology. I'll share it with you right now.
There are all kinds of technical explanations for stock market crashes, but at root, it's all about herd psychology. In a bull market, that's when share prices are rising, even the smartest investors can succumb to what the former chairman of the American Federal Reserve, Alan Greenspan, famously called irrational exuberance. But when the herd changes direction, sometimes in reaction to nothing more than a change in the wind, their mood can also change from euphoria to gloom. The herd stampedes.
One cow gets scared, and that fear just translates to the whole herd, and they all take off. And the rest of them don't know why they're scared. They just feel that fear, and they run. Fear overwhelms all rational thinking. Until it's over.
In market jargon, the buyers have turned into sellers, the bulls into bears.
Despite the zoological imagery, the point is that markets are mirrors of the human psyche. Like Homo sapiens, they're prone to mood swings, from greed to fear. They can suffer from depression, and sometimes they can experience complete breakdowns. That happens rather more often than some financial theories would lead you to expect, but not so often that we're ever quite ready for the next breakdown.
So how do we avoid those breakdowns? Again, we have proper rules, tools, and strategies for entering and exiting the market. And we do that with consistency in our trading as we go along. You also need to follow someone that's walked the path in the direction that you're going. You can go out there and fight the market yourself, as I did, or you can follow one of us and take our trades with us as we go along the way. So what we use to enter and exit the markets are what are called bar charts. This is called a buyer's bar with the open and the close here. Now, if that's a buyer's bar, this is then a what? Excellent, well done. It's a seller's bar, except the open and the close are reversed because it's trending down. The highs and the lows are exactly the same. Now, these bars can represent a 1-minute time frame, a 5-minute, a 15, a 30, a 1 hour, a 4 hour, a daily, weekly, or monthly. So if we're looking at a monthly time frame, we've got 2 bars. We're looking at 2 months. Everyone with me? Yes or no? Yes or no? Yes. Good. So we're looking at 2 months. Now, in the share markets, they tell you that you need to know where the highs and lows have been for the last 3 to 5 years. So if we're looking at a computer screen with a lot of these bars on it and we're looking at a monthly chart, we're looking at a long frame of time. Yes? Good. 3 to 5 years. In our market, we don't need to know the last 3 to 5 years. We only need to know the currency pair that we're trading. And we need to know where the highs and lows have been the last 90 days and the last year. In other words, the Aussie dollar in the last year was at 102 was its high. Its low was 81.79. The high represents 100%. The bottom represents 0%. In the middle is 50%. It's called pivot. Please write that down. I'll talk about it a little bit later. We need to know where this pivot line is because the safe place to trade in foreign currency is between the 38th percentile through pivot to the 61 percentile, and then 61 percentile down through pivot to the 38th percentile. We use this, they're called Fibonacci corrected numbers. These pivots always show up on your chart on the day after the market closed. So when we look at market closes right here, when you open your chart up, it would be based on these numbers, not these numbers. In other words, it's based on yesterday's trading. Now, to take 20 points out of the market, this is the Aussie dollar. $1 is buying 97.94 when it closed out on Friday. Today it opened at 99.78. Could we have gotten 20 points out of there, yes or no? Yes or no? Yeah, we could have gotten 20 points out of there easily. That's a very, very nice little ride there. We've got 184 points out of this market right here. So 20 points would have been easy to get. Now, in trading down from where the British pound closed at 61.11 down to 61.51 up to 61.51, it opened. Could we have gotten 20 points there? Yes? Yes, we could have. And on the euro, 70.61 and 70.33, could we have gotten 20 points out of there? Little bit tighter, but we could have at this point. Now, this was a very, very nice move on this, and this came about because of the problems with that are going on with Japan, which are fundamental challenges in the market that we look at. We also look at, we're not going to teach you all about technical analysis. We're not going to teach you about fundamental analysis. We're going to simply sit you down live one-on-one with a professional trader and show you how to make an immediate income in the market. So we look at these movements so that we can do it. One of the best movements, this is an advanced strategy, is called the Monday morning gap. I never miss it because it's based on where the market closed on Friday and where it opens. Now, even though these settled down and these are mid-market rates before I came in here today, there were gaps in there of 150 to 200 points. So this is where we get most of our points out of the market. It's called the Monday morning gap. You want to learn this from a professional trader because otherwise you don't know it's there and using it. PIPS stands for price in points. It's the smallest denomination that currency can be quoted, and currency is always quoted to 4 decimal places with the exception of the Japanese yen. The yen is only counted to 2 decimal places, and a pip is therefore 1/100th of 1 cent. So to give you an idea, to show you markets and how they move, I want to show you what's called a scale. Again, this is an advanced trading. Anyone know about scaling? Good. There's no one in the room. Excellent. So you'll understand it real simple. Now, I'm a Midwestern farm boy. I grew up on a farm, so I'm not here to impress you with what I know or look slick or anything else. I'm here to teach you and have you learn about trading foreign exchange, what works for you. I keep things very simple. Being dyslexic, my grandmother, I came home and kids made fun of me and would tell me I was dumb and I was stupid. And yet Grandma just said, look, Stephen, just slow everything down. Get it down to where you can understand it, and then you will get to where you need to go, and usually you can expound on it. Anybody like that in here? You need to just slow down a little bit sometimes? Yeah, I'm the same way. So I make things real simple. Now, these are a bit more in depth than this, but you'll understand it. This is the easy way. So the Australian dollar, how many of you remember that in March of 2009, 2 years ago, it was at 64 cents? How many of you remember that? Good. Now, if you remember and recall, by December of 2009, it had risen to 94 cents. Yes?